thanks for the second reminder. So once again, we're here to look at TradingView with the additional TAB29/shredder components, rounding out everything we're going to have on TradingView for the interim short term. And so, as I said, the first thing here is on multi-wave, we have an 80 and 20 line now to help with your buying to the sell into the retrace extremes. Other than that, there you go. I've had a few people ask me about decimal points. So if you're not aware, you can set that, and save all that. Anything you do to your chart, save to a template. But one of the things you can do over on scales is down here on the bottom right, it says decimal places. And if you set it to 1 in 10,000, that'll take off the 5th decimal and just bring it down to 10 to 4, excuse me, which sometimes that last decimal throws people off. So if you want it just 4, that's the easy way to do it. Okay, so what you see down in the indicators with the values there is again a title they have, and that is indicator last value. And so if you don't have that checked, it'll take them off. So if you want to see the last value that's being ticked on the charts, you have to have indicator last value turned on. Now, when we do the same, once we load this up with INS and we do the same, this entire field is going to look like this. Okay, they're just going to be jammed. And what happens is they spread out the data. And so you will actually have price lines, including some price on the chart, that are not in the right places. These value indicators will be in the wrong place. And that's because the default that they go with when you open up your charts is no overlapping labels. Well, if you have your last indicator, last value turned on, and you have this turned on, they're going to be running out of room. And so you cannot make the chart tighter to reflect where price is. So your price and your indicators are going to be in the wrong places. So the way you overcome that is to uncheck this. So you would come down here. Now, no overlapping labels is generally the default. So you would uncheck it, and now it would allow them to overlap. Okay, and you might even see that down here if I squish this field up. See how they start overlapping each other? You can still read the numbers, but the little rectangle starts to overlap. When you have a whole bunch on the screen with INS lines, that can be, annoying. So they're either on or they're off. If they're on, I would recommend not having the no overlapping box checked. Okay. So the first indicator I want to talk about, we've broken out from the general INS. It's still an INS indicator, but the static chart support, which SCS as it was known in its ProChart days. There's 2 levels: the static chart support 1000 and the static chart 500. Generally speaking, the 1000 is a level of support and resistance for your higher term charts, I would say 4 hours and up. And the 500 was for, your everything less, than 4 hours. So good 60 minutes and on down. So these are essentially 2 levels of kinds of support. Now, you probably don't remember from your SFX 30 days, but static chart support are fixed prices on the chart that are established through some Fibonacci work based on 10-year studies of price movement. And it's true across all charts. And it's it's not a dynamic value. These are fixed values. And, you know, you can obviously see their names over here. And, you know, what we've done is just colored the colored forward the oh boy, carried forward the color scheme. See what happens when you're tired and you have a fever? Carried forward the color scheme that we used to have in ProCharts for this particular indicator. And so like any other indicator, you would turn it on and turn it off. There it goes. And on a 1 minute chart, you're probably not going to see it because there's, you know, it's spread out enough. So let me pull this back for a second and jump to something bigger. Oh wow, what is going on? Oh, okay. I don't know why these all changed. It's kind of interesting. All right, so let's put our static chart support on an 8-hour chart. And these are sensitivity zones, and they're like any other support and resistance. You will see them someday, some weeks, some months. They are smack on. Other months, they're I don't use them that frequently, but being on a toggle, put them on the chart and being able to toggle them on or off is pretty cool. Okay, so that's all I'm going to say about static chart support, but it's there. All right, so let's go to a 30-minute chart. And the first thing I'm going to do here is tease you with a little bit of what's already there. And that is, this is a 30-minute down move. And what I want you to see here is there is the 1362 cross. You will see there's a little tiny red arrow there. If I was zoomed in a little bit more, it'd be more clear. And so these are down harmonic targets. And what I want you to see is even in this particular move, there was a gap. It came back in, and then it was held in those two harmonic target zones. Comes down those to the pip touch, to the pip touch, comes down, goes back up. It's resistance here, comes down to the pip touch, to the pip touch. So these harmonic targets, for those who have not had them for a while, you're going to enjoy having them on the charts. They are very strong. Okay, so let's get into the first of the things I want to show. And the first component I want to cover is shadow bands. So let's go look at the formatter for this. And this is pretty cool. Again, this is an implementation that we didn't have with ProCharts. And that is that we've designed it so you can display either the upper shadow bands or the lower shadow bands or both of them. Now, a nice feature here as well in this implementation is shadow bands are a local reality. They use the 62 of the local chart. So if I put shadow bands on a 10-minute chart, I'm seeing my shadow bands around a 10-minute chart. Now, we did this because when we first came to the SBT world in 10-minute trading, we used shadow bands at the 1, 5, 10-minute level. And what we realized was that we can get away from some INS lines or a lot of the INS components because those INS components would be validated by the 1 minute, 5 minute, 10-minute shadow bands. So, you know, this is shadow bands as it is a local indicator. However, If you check that box, your 30-minute shadow bands now could be put on any time frame less than 30 minutes. So you could have 30-minute shadow bands on your 10-minute charts. You could have 30-minute shadow bands on your 1-minute chart. Totally something we weren't able to do previously. Obviously something that continues the support of 1-minute trading as an execution for everything that you have going on your charts. So this is a super new feature. The shadow bands themselves, when we put them on the chart, something you will notice compared to Shredder is that they don't force compression on the screen. You can have shadow bands off the screen. The other thing with shadow bands that I want to point out when we go to style, because these can be used at any time period, we allowed provision for these to work not just the typical 21 and onward that we would for a 30-minute chart. You can also have 5, 8, and 13 like you would on SBT charts. So I can operate with just these in the SBT world on my low-level charts without having this stuff, clutter up the rest of the screen. So you get to choose which of the bands you want on there and which ones you don't. So if I want to take off the lower level shadow bands that I really don't want to see, on a 30-minute implementation, I can do that and just start with the 21 out. And in this case, price is below the 62, so I could turn off the upper shadow bands. And now just operate with shadow bands on half screen. And I could turn them right back on. So very, very powerful with shadow bands. Now, I want to talk about the 62 with shadow bands. So I'm going to put the shadow bands on again. So here's something that's pretty cool. So the power of the 62. And there's certain realities. Like, first of all, 62 bounces are really good trades, especially when they come from afar. When we have a consolidation around the 62, that's no great shakes. But when we have a move come in from outside the 34 here, goes past the 21, that's when we know we have an 87% chance of getting to the 62. So you may want to know when price is leaving the 21. This very well may be a momentum move you want to take advantage of. That was the essence of our Power 62 trading many years ago, was just waiting for that move right there. And the reason we were waiting is because in the old paradigm days, you can get into this trade with the 10 pip stop loss. So if we can make 21 pips with a 2% into a 10 pip stop loss, we were making 4% in these trades, which for somebody sitting there with a 150 pip stop loss, they'd have to catch their 300 pip trade to make the same 4%. So while we waited, we probably waited less than they did for 300 pip moves. So catching the moves inside the 21 is pretty good. The other thing then is maybe you want to know when it's just about to bounce off the 62. Yeah, I hear you, Zoe. So maybe you want to catch a 62 bounce just to see if it's going to happen. So we can set an alert for that. So we can set a proximity alert, but rather than using fixed distances, we just took advantage of the way TradingView will dynamically see what we have on the chart. So watch this. I'm just going to go to empty space on the chart. Now these are standard TradingView charts. These are not OEM charts of any kind. And all I'm going to do, like I normally would to set an alert, is I right-click and add alert. And what you're going to notice then, okay, is shadow bands are here, right? And if we say entering channel, look at this for value. Shadow bands. Let me pick the 5 up shadow band as the top of the channel, and the lower channel, I'm going to use shadow bands again, and I'm going to pick the 5 down. So now I've got a 10 pip zone, 5 pips on each side of my 62, and I can set an alert for that. When it enters that channel, on condition, live channel, live candle. So anytime price now comes within and crosses the 5 pip shadow band, it'll then go down to the 62. Likewise, if you want to make shadow bands and set that at the 21, at the top end, and 21 at the bottom end, and try and capture, the wider channel, but the run to the 62, you could do that as well. Pretty cool. Pretty cool. Any questions on the channels that you can create? And see, the whole thing is, here's the important note, you've got to have the shadow bands on your chart in order to set this. Because shadow bands have to be active, so when you go in here, it dynamically picks up that shadow bands are something I can set an alert on. So it's sensing we have our own indicator on here. That's what's powerful about TradingView. We don't have to program a lot of stuff, but we can take advantage of some of these dynamics in these menus. Okay, so very powerful the way that was done. And again, credit to Adam and a lot of his insight, because I kind of give him what I'm looking for, and he thinks about the way TradingView works, and he comes up with great solutions all the time. And he's a tremendous asset to what we're doing here. There's nothing better than having a trader on your programming team, a trader on your programming team, than having a programmer on your trading team. So very cool. All right, that's about all I want to say about shadow bands. You can play with them. The only thing to remember is this right here, is you can put 30-minute shadow bands on a lower level chart, which that's pretty impressive. Okay, INS. So we have a bunch of things in our INS system. Of course, shadow bands are part of the INS. The static chart support is part of the INS, but we broke it out for a number of reasons the way we did. Excuse me for gulping with an open mic, but my throat is dry. So let's talk about INS, and so we'll go to format that. A couple things to notice here. So you'll see the components as we have them on here. We've got harmonic targets. So that is our infamous 1362 stuff. If you don't need it, if you don't understand or haven't seen the 62 stuff yet, you need to read through that in our material. We're heavily influenced by the 62, and it's not just fun favorites. It's based on science and empirical study. We know the 62 is the best moving average for magic in terms of being the center of the road, for magic in terms of the things we can build off of it in a Fibonacci way. And so our harmonic targets, if you haven't reviewed that in years because you're an old timer or you're brand new, I'd make sure you really pay attention to the whole concept of how we evolved the harmonic targets. I showed you when I first came on how accurate they are, and they're extremely powerful. So we also have Camarilla lines, the DC45 system, Fibo pivots, and the DP30 lines. There's really nothing to talk about this other than you can selectively turn on and off what you want, which is pretty cool in terms of rotating through stuff. So, I see price approaching a point. I could rotate through my INS. I wouldn't recommend having them all on your chart because now you're going to have a piece of art that belongs on an abstract museum somewhere, or abstract art museum. You're not going to be able to read anything. So I would rather recommend you, rotate through these to see what you prefer. But you do whatever you want, whatever you're most comfortable with. So, it's always fun to rotate through the different ones and see if in a given day, one of these subsystems is holding better than the others. It'd help if I turn the system on. All right, so now we have cam lines. Well, they're only from 1700. So remember, just like on ProCharts, these are session based. So in other words, these cam lines that you're seeing on the chart now are based on this day's ranges, and they're calculated from that, and then they get put on the chart here. So moving forward tomorrow, these are going to hold for the next whatever session, right? So they're from end of day yesterday, whatever yesterday was for you. Well, 1700 New York, and they move forward. Along with, we have to, not only are we blessed with some of the great features of TradingView, we're also limited by some of the features of TradingView. And one of them, of course, is labeling and how you want to do that. The best way, if you're trying to deal with, old school, you came from, from ProCharts and you knew what each one of these lines was, is you can always come over to the data tab and see what's going on. And so in this particular case, you can see the cam lines down here. And so, being that we turned the lights on, if you will, for last value, which is a fixed value, which will stay there now for the rest of the day, you could match these up to what they were. So 787 is the H5, the 6059 and the 29 are the go short, go long, and reverse, scenarios. So you can always get in here, make yourself familiar with which line is which, if you so desire. But so that would be the Camarilla subset, and we can turn those off, and let's put on the Fibbo pivots. Now remember, the Fibbo pivots were something we derived. Now it's going to be the same thing for them. They are based on the previous day, okay, based on the previous day, carried forward from that previous day until the close of the next day. And so there you have your first touch on a Fibbo pivot since the close. Pretty nice. Ooh, ah. In history, you may not remember, but I looked and looked and looked at a lot of different support and resistance systems. We used pivot lines for several years, and then we, as I became more Fibonacci oriented in the charts, I became much more fascinated with Fibbo pivots over regular pivots. The formula is different, obvious. There's a Fibbo twist to it, and we ran them side by side for a couple years. And I could just tell you this, there was no question that the Fibbo pivots totally outscored the standard pivots. So just telling you anecdotally what we know. So we stopped running them side by side. We had about a 75% overlap, but the rest of the overlap, or the rest of the non-parts that were overlapping, the stuff with pivots didn't bring us anything, but the stuff with Fibbo pivots did. So we just ran with Fibbo pivots and dropped pivots. So if you're wondering why we run Fibbo pivots versus standard pivots, that's why. We ran them 2 years and Fibbo pivots gave us better touch. Well, if you take a screenshot of your chart fully loaded, Tim, and you sell it for, what'd you say, 200 mil, 3 mil? Oh, 200 million. Just send me a couple of it, okay? So Fibo pivots, okay, DP30 system. Again, we're kind of early in the day because these lines really start on the last session break here, the last session end. So it's fun. Oh, there it goes. It just readjusted for the day's end. So these are going to be better to be viewed as time moves on. Any of the range-based systems, the CAM, the Fibo pivots, and the DP30 is just that. They need better. They need more time on them to predict stuff what's going on today. So we had two things that we didn't look at. No, we only had one thing we didn't look at, and that's the DC45. Now again, this is kind of a hidden gem. Those of you new to our group, the Shredder group, the DC45 is a unique reality. I learned it from an institutional trader. You will have fun with this as time moves on. And what it says is it doesn't matter the currency pair, that price after the day's close will hit one of these two lines every day. And so the DC45, maybe I didn't check it. Yeah, it would help to check it. The DC45 is nothing but a absolute 45 pips up from the daily close and 45 pips down from the daily close. Maybe about 1% of traders, not even that, of traders worldwide knows what this is about, but you will absolutely be astounded at the number of trades this gives across all pairs. Okay. The DC, yeah, Tim Packus is saying, I love this line because he knows how many trades we get off of it. And it's an institutional trader's thing. I wasn't able to get him to explain how it came about. All he said is you will see a lot of bank traders and institutional traders use it to base some trades off of in the day. So that is your INS system. I wouldn't recommend changing colors. Those are kind of standards we came up with. Of course, you do whatever you want. But when we're in community, it's nice for colors to remain the same so we have some semblance of an idea of what you're talking about or what you might be using. Other than that, that covers the INS system. Questions? Well, those portions of the INS system. Show components, harmonic targets, current hits. I did that. Okay, moving on. So we have a little fun down here at the very bottom of your screen. And again, you can put it anywhere, but that's where we prefer to run it. And let me move to the 10-minute chart for this. So sometimes some of you have an old paradigm trait, and I don't belittle this one at all. I think it has its advantages at times. And that is this. This is a trend dashboard. And I've got it tight, so it's just the same way I like to run my shadow bands. I like to run it tight. I don't like to see the divisions between the bars. But as you can see here, there are 7 bars. And they are, for lack of being able to use labeling the way we might be able to elsewhere in TradingView, the way we got away with it was we put the numbers here. So starting from the top, working your way down, these are the trends for each time period. So the trend for the current 10-minute period is down, 30-minute is down, the 2 hours down, and the 4 hours down. Your upper level waves, the 240, 480, and daily are all in an upper trend. Okay, so obviously, we had a period not too far back when we were first putting this stuff on the chart where all of them from 10 down to daily were green. And that surely would get me more interested in a buy than it would a sell if every time period was in an uptrend. There's no go or no go in terms of execution on here. It just gives you an idea of where the strength is. What do you think's happening right now? What, anybody want to guess at what the big picture is right now, just looking at that trend dashboard? Remember that when you have a move, which time period moves the fastest? The shorter time periods, right? The shorter time periods are going to move faster. So if I'm in a general uptrend with all my upper level waves, daily, 4 hour, 8 hour, those are all pointing up. Well, not pointing up, but they're uptrends. This may signal that we've got a major trend reversal coming. And what will happen when that occurs is one by one, these lines go red. First the 10-minute, then the 30, then the 1 hour, then the 2 hour. They've all turned over. The shorter terms turn over while the longer terms are still lagging up. But one by one, they start coming over. So as you watch these starting to come down, you may have a trend reversal. So right now, what it's saying is, what would I favor here? Up, it depends on time period, but on a 10-minute trade, a 30-minute trade, what would I favor here? I'd still favor a sell right now, because what's happening is, in terms of the bigger picture, you have waves going up and down like this. Just because you're in an uptrend doesn't mean you can't have a pretty substantial down move. If this is an 8-hour chart, as we're measuring this trend, we're going to say it's up, because that's the way the channel's performing. That doesn't mean, the 2-hour move can't be coming down as a retrace in that channel. And a 2-hour move could be pretty substantial, 100, 200 pips. So at the very short-term level of this, if I'm going 10, 30, and then 60, 120, hey, there's still a lot of down momentum right now in my lower level charts, and that would include my 10 and 30-minute chart. Upper trend, or the higher level waves are still upper trend. So it's not so much, like I said, it's not a trade execution thing. It's just a good handy way of knowing where the trends are. And as you can tell with what we're doing, is we're moving you to be enabled to do 75% of your trading 10-minute or 30-minute waves off your 1-minute chart. I could bring my 30-minute shadow bands down to my 1-minute chart. I can see where all the trends are. So this little dillywat we call the trend dashboard, and I like to keep it out of the way from the waves, the waves indicators, but that would be my recommendation as a group standard, but put it wherever you want. So that's about all on the dashboard. It's a pretty cool little feature. Oh, one comment. In TradingView, and unlike ProCharts, we can't go lower time frame to upper time frame. We always have to come upper time frame down. And that's why, on a 30-minute chart, we can't show you 5-minute waves or 10-minute waves. We can't take the smaller wave up. We can only bring the bigger wave down. We were able to do that in ProCharts, and it looks nice in real time. But as soon as another minute and another minute and another minute closes, you lose accuracy in bringing short-term waves up. So I'm purposely put the dashboard here on my 10-minute chart so you can see how it works and how it looks. 7 periods, 7 bars. If I look at my 30-minute chart instead, you'll see the first trend bar is white. That's because the first trend bar is the 10-minute bar. And I cannot bring the 10-minute values up to a 30-minute chart. I can only take 30-minute and bring it down to the 10. So the first field, which is our 10-minute gauge of where things are, we're not able to bring up to the 30-minute level. So just understand why that looks like that and why there's a white bar there instead of green or red. Just the reality of what we have to deal with the charts. But for your lower level trading, 10-minute and 1-minute trading, the trend bars, if you have decent moves in several directions, you might find the trend bars very helpful. Not the trend bars, the dashboard, the trend dashboard. You might find that helpful in some decision making. All right, so that's the dashboard. Okay, moving right along. Moving averages. Woo! You can obviously do whatever you want with your charts, moving averages from the built-in indicators, or the public library if there's stuff you want there. We've done a few things with moving averages to facilitate shredder trading, TAB29 trading. Okay, and so I'm going to show you the selection panel, and we'll go over this. This is a pretty comprehensive selection panel. So, a couple of things to note here. Enable the 62, enable the 13. So obviously on a 30-minute chart, we can do that. Enable the haul. This would be local, which means if I'm on a 30-minute chart, I'm going to see my 30-minute haul. If I'm on a 10-minute chart, I'm going to see my 10-minute haul. But now you can see there's other options there. We can take our 10-minute haul and put it on a 1-minute chart. We can take our 30-minute haul and put it on a 1-minute chart. So I'd be on my 1-minute chart, I'd pull up MAs, I'd come down here and click enable 30-minute haul here, and what I want to get on my 1-minute chart then is the 30-minute haul. You can put the Vegas tunnel on a 60-minute chart, so you don't have to go through the effort of the 144, 156, 169. It'll do it for you with a click. We can put an up-down arrow on the 1362 cross if you want as an option. And of course, the big thing here is we can put the 30-minute 62 on our 1-minute charts. Now, what's powerful about what we've done here, now catch me, this is brand new. This is not something we had before. And what this does is, with where we're going, it's going to enable you to participate in bigger trades. Right now, if I were to look at trades submitted, you'll notice the PIP scores. They reflect a tendency towards the shorter term. They reflect a tendency of, I'm going to take the profit now because it's simple. And we're missing out on some good 30 pip moves. So where I wanted to move my trading was to allow me to continue to operate in this TAB29 super environment for 10-minute trades, pieces of 10-minute trades, etc. But I want to catch more 30-minute waves. And my methodology for that is I will take that 30-minute trade entry, even if it's anything close to a 30-minute convergence. Maybe that 30-minute peak is at 85 and the 10-minute wave is converging. Normally we'd call that in multi-wave, we'd say, oh, that's lower level leading upper level, don't mess with it. Wait for it to retrace and wait for it to reconvene, or reconverge. But with TAB29, that move where the 30-minute peak gets up to 85 and the 10-minute converges and starts coming down, again, it would look like lower level leading upper level in our older paradigm of the new paradigm, i.e. the multi-wave era. But I treat that 30-minute wave at 85, I treat that as a convergence. And I let the charts prove me wrong. But the way I'm going to resolve it, whether it's at a convergence or whether it's shy of the convergence, as long as I have my 10-minute convergence, I'm going to treat that first 10-minute wave of the 30-minute wave as a pieces of 10 move. And so I will enter with the impulsivity. I will exit on the hookbacks, when we have our strategy there for bars in the reverse direction. I'll re-enter if it continues down. If it's going to snake, if it's just going to go right back up, I've at least got some pips out of that burst. I get 5 pips, 6 pips, sometimes 10 pips. If it really was lower level and it's going to go back up, I'll get some pips. And it's not going to retrace on me, or it's not going to go back up to converge and take my 10 pip move and bring it back to a -3. I'm going to get my pips, whether that really was a convergence or not, at the 30-minute level. So this is powerful because that pieces of 10 on the 30-minute trade will let you get into anything that resembles a 30-minute wave. Once we clear that first 10-minute wave, and it appears the 30-minute move is still moving down, I can now hand my trade over to the Hall. The one thing we were missing with the Hall 21, which we brought to ProCharts, by the way, that was our gift to FX Truck. The one thing we couldn't do on ProCharts with the Hall 21 was catch the flip, because it's a little bit more complicated than a normal flip. Say if I just have a wave, and you used to see this in the old days when we ran peak 3 and looked for the reversal of the move. Peak 3 would go up green and then it would come down red. And it's pretty easy from a programming standpoint to do that, because all you're doing every time you go up another candle, we say, is my current candle less than or greater than the previous candle? If it's greater than, this must be green. And when that marches and marches and marches, well, not the candle value, but the value for the moving average, the value for that indicator. So, but up here it was easy to do. Once we started heading down, it was easy to do. The challenge with the Hall is it's green like this. So you enter a phase of the reversal of the indicator, but not the trend, because this is two things. It's not just a Hall 21 moving average, it's a Hall 21 used as a trend reversal indicator. And so this is much harder to find. And trust me, I had tried for quite a while and never got there. Adam put his best energy in it and probably got about 80% of the way there. But neither one of us were 100% confident with what was there, so we never brought it to the public. We never released it. He's figured it out in TradingView. So now I can set an alert for that point in time. So now your 30-minute money management becomes so easy. You don't have to make decisions. Let the Hall make it for you. Now, don't be an exception hunter. There will be times that the candles that create this situation where we get the flip, you may have, a big candle. And remember, we don't change this flip in color except on a closed candle. So there may be a trade, and I'd say maybe 1 or 2 out of 10, where you'll have a steeper than normal pullback. It ain't no 50% most of the time. Once you get past your first 10-minute move, and that 10-minute move is cleared, or you see the wave 2, you're not going to have a problem with the Hall, being more than 50%. That's just, like I say, it's rare. Most of the time, this turnaround that will generate the flip in the trend color in the Hall is it averages out, as I've measured it across, many times. It is a little deeper than that. It averages out at 23%. Now, you'll say, well, oh my gosh, what if it's going to retrace 38%? Well, look, in a move like this, what happens, you got to watch how you talk about retracements. And I know some of you are brand new and don't know Elliott wave, and that's okay. But for those of you that do, just pay attention. We know a wave 2 has this history, E-signal 10-year study, 50 to 61.8, 73% of the time. So it's a quick and deep move, 50, 61.8. What about wave 4? Wave 4 is slower or it's shallower and elongated. And so that 10-year E-signal study says the bulk of these are between 38 and 50. And then it continues on. So you've had retracements in here. If you were running a stop loss here with 50% retracement, you probably would be taken out before the wave 2 hits. Well, let me draw it a little deeper. You'd probably be taken out right before the wave 2 hits, only to watch it turn around and go up. But that 50% is from here to here. This 38 to 50% here is not from the origin, it's from wave 2. Wave 2 to wave 3, 38 to 50. So bottom line is this move continues. By the time you get up here, and I'm talking about 23% of the move, I'm talking about 23% of the entire move. So you're getting to keep here, 77% of the move on average, which is phenomenal because if you follow my teachings over the years, most traders, if they're good, average about 65% of a move, being able to put it into their pockets based on the length of the move. So if the Hall is going to let us stay in and on average takes us out with a 23% pullback, we're keeping 77% versus 65%. You can put the Hall on any time frame. Remember, let's go back here a second. What did I say about this checklist, this checkbox? Enable Hall, it's local. So if I'm on a 240 chart and I click this box, I'm getting a 240 Hall. So again, the old 240, this is coming from a trader going way back who traded the 240 system or knew the 240 system. And the challenge there was, the Hall took us out faster than the harmonic targets did, but that's only if you sat there and stared at a 4-hour chart. Now you have an alert to tell you when your 4-hour trade has ended. And don't worry whether your pullback was 22% or 35%. Just go trade it. It's mindless. It's truly, your JAT. It's truly your junior or JTA. It's true. Man, lock me up. Just lock me up. Words aren't coming out today. Your junior trading assistant, all you're saying is, hey, tell me. Okay, tell me. So let me show you that right now too, because this is powerful. You're going to love this. Again, dynamics of the chart. Dynamics of the chart. So I'm on my 30-minute chart. I've got a Hall on here. Because I have my Hall on this chart, TradingView's intelligence understands that. So now I come over here, add alert. I want to use moving averages. And look at the first thing that comes up. Hall moving average flip. The only thing I have to do here is to scroll down because I selected MAs. Which one do you want to use? The Hall. So now I'm going to use a Hall with a Hall flip. And down here again, on close, not on condition. We don't care if it turns green or red on an open candle. It has to be on the closed candle. So now we're not going to get false alerts. We're only going to get the alert when the candle closes if it's turned colors. Boom. Show pop-up, play send email, send SMS, whatever you want to do. Here's my only recommendation. You're going to want, if you're using the Hall flip alert, you're going to want to come in here, trust me, and specify In this case, I would say, excuse my typing, Euro, USD, 30-minute, all flip. I don't know why that didn't come out uppercase. So now when you get an alert, it'll at least tell you. Otherwise, it's just going to say whole flip. And if you have 3 of them set on your 30 minutes and maybe 1 or 2 on 10 minutes, you're not going to know what it is. So it's really easy there to just label it and let it know what's happening. And there you have it, right from TradingView, tapping into what we're putting on the chart dynamically. And now, for the first time ever, you're able to use the Hull as a money manager to tell you when to exit a trade and get an alert on when that time is. Now, that doesn't stop if you want to put interim markings, along the way to hide your stops as you're moving along. But you have no idea how long the Hull is going to go. That's why it's a better, rather than trying to pick a target and then leg down until you get that target, and all of a sudden the price moves twice as far and you're only in with 10% of your lots left. Oh my. So this is really conducive to the person that says, I want to leave all my lots in and just let it go as far as it can. But you'll want to establish some protective stop movement along the way. And again, you can use Fibonacci for that. If it's a big enough move, if you're on your 240 chart, I'd recommend using the 62 money map. Find places to hide your stop. You do it however you want. Money management is trader's choice. But I'm excited by this because now I can enter a trade and enter an alert, and I'm safe. I would continue to move my stop, as a emergency in the trading station, 50% of the trade up, in case, the alert for whatever reason doesn't work. Then I'll just give everybody Adam's address and you know where to go. Sorry, Adam. Had to throw that one in there. So the Hull is very exciting. It's going to allow robotic trading. Same thing, same trade every time. And it brings memories back of what trading from the money map was. If it gets to the next target, great. If it doesn't, I get profited out. If it gets to the next target, I move my stop. If it gets to the next target, I move my stop. At some point, I get profited out. That's why we talked about the money map being a JTA product. I can hand it to my junior trading assistant, i.e. the part of me that doesn't have to think. So these alerts on the Hull are going to create some serious opportunity for 30-minute pips, but still at 2% every 10 pips. All right, let me drop down to the 1-minute chart. We're going to wind this up with the last thing we want to look at, and that is TAB29 alerts. So this is cool. There's no magic in it because all we're doing is automating a piece of the puzzle that you would do manually yourself. But it frees you up. I'll be honest, because I'm human, and all traders are human. You're like me too in that sense. And we get to points where you can get like the opposite of chart addicted. You could be on the chart so long that you're just like, let me out of here, because you're waiting for a trade, you're looking for a trade. But now with the TAB29 alerts, you literally can turn those alerts on, 2, 3, 5, 10, whatever you think you can manage, pairs, and go on about your business. Maybe you want to return some emails. Maybe you want to get in your 20 minutes of self-development work and or more so, you got 28 pages you got to get through today, and you start on that process. You don't have to stare at the charts waiting for a trade. You can be in the kitchen cooking dinner. You could be sitting out back with the children. And now you get an alert. And again, as I demonstrated yesterday with the teaser screenshot, The alerts are not signals to take a trade. The alerts are come to the charts and you validate. Now, this is TAB29 alerts version 1.0. Adam and I already have some pretty solid ideas what we want to do here. And this is going to be pretty cool stuff. You're just starting to hit the tip of the iceberg with what we're doing here. All right, so here's what we have. Let's open up this indicator. First of all, unlike ProCharts, we kind of adopted the motive wave look where you can set your threshold zones. Until you have a better sense of what's going on, we're defaulting with 85 and 15. If you feel you need to tighten that up, tighten it up. If you feel you need to loosen it up, loosen it up. Trader's choice. But that's where we're starting. All right, so you have some choices, and you got to do a little work in setting up your alert. So you have an opportunity to set alerts on my 1-minute chart here. I can set alerts for 10-minute trades, and I can set alerts for 30-minute trades. And literally on your 1-minute chart, you're getting multi-time frame alert trade entry alerts. And so there you have it. You get to set the color. Again, we go yellow and blue for the entries. So these are literally come to the chart. We think there's a sell. We think there's a buy. 30-minute, 10-minute. Any questions about that menu? All right. Once again, we're tapping in to the interface dynamically between how TAB29 works and how TradingView works with what it understands is on the chart in a dynamic sense. So we've got our TAB29 alert here. We set the parameters. Now we've got to actually set the chart alert. And that's right here. So I'm going to pick TAB29 alert. See, we put the alert package on the chart. TradingView sees it. So we can select TAB29 alert. And right here, look at your options. 10-minute sell, 10-minute buy. 30-minute sell, 30-minute buy. So let's say I want to look at 10-minute sells. So I have a 10-minute sell. 10-minute TAB29 buy. These have to match up. 10-minute TAB29 sell. So these two have to match up. We select TAB29 alert. Now remember, it's not going to work unless this alert is on your chart. On this indicator's on your chart, excuse me. Once it's on the chart, then we can interact dynamically with TradingView and how they see things. Again, once per bar on condition, set your date ranges, blah, 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 TAB29 sell alert. You can go ahead and specify what it is, Euro USD. If you want to put that in front of this, fine. Now, one thing about alerts, you cannot backtest alerts. And again, this has to do with live status versus closed status, so you're not going to get any kind of accurate representation. Oh, let me see how good this really is. That's not going to work. You can only forward test it. And you could put it on the chart. Now, it will give you some back data, but it's not accurate and complete. Okay. Now, what it's really looking for is times where, I don't know how far this may go back, right? What it's going to look for from here on out, that's funny, Zoe. What it's going to do is it's going to put a little yellow triangle above, and all it really is saying is that there's a condition in which the 10-minute wave and the 1-minute wave are both above 85. You better come to the chart. And so when it gives you that alert, let's say it put the alert on this one here, all you have to do is have your cursor on and wait for the bars to flip to see if there's a trade. And if it occurs inside your allowance and you're good, you can take the trade. So it says come to the charts. All you have to decide is whether the bar's flipped and it's really a trade. So it's not some magic algorithm that we're using. We're using the same thing you would use visually. It's just you don't have to be stuck to the charts looking for that visual clue. And I think that's a godsend as well. So that's it. That's, we're bringing over, it's not just INS, we're bringing over some pretty powerful things with the shadow bands. We can use them as channels to look at ranges around at the 62, whether we want to come in from 21 or 5 pips out for a proximity hit. In our moving averages, we have all sorts of capabilities, moving the 62 to the 10-minute, 1 minute, local hauls from the 30-minute down to 1 minute. We can do haul flip alerts, and now we have tab 29 to do alerts to bring us to the chart. And that's all part of your tab 29 indicator package. Questions? Well, here's the deal. There's a number of ways to approach this. And I don't know any one of them is the best. But for the people that invested in tab 29, training and indicators, I think this just rounds out their deal. In terms of things like the tab 29 alert, that's not going to do anybody any good that doesn't have tab 29. Yeah, they could probably use a 15 pip stop loss and be safe. But I wanted to bring more value for what you're doing on the charts. And I also committed that I would have this stuff here by year end. And so we wanted to carry through with that commitment. There is none, Freddie. That's the whole point. Even if you have the most expensive Pro Plus plan from TradingView, it's $29. You can get that way down by buying annual plans and their discounts that they offer you, etc. But $29, and our indicators for those that didn't do the early bird when we first brought them out are $39. Let's be real, $30 for TradingView, $39.99, $40, $70. So it's still 70 versus 100 for ProCharts. Plus, oh my gosh, web-based and on any device, and all the cool things you can do here. Visibility from upper time frames down to the 1 minute with lines and fibos and pitchforks. So sweet, so light, and so it is, it's the end of a small revenue stream that we used to make off ProCharts. So it's a lot. Obviously, if this is the price to you versus this the price to you, there's less opportunity here. And for half of that, for the 30, we don't get that anyway. We're only getting a tiny, tiny piece for those that actually use our links. So a lot of people don't use our links. So the only thing we're really getting then to carry back and carry forward with programming and additional development is the subscription fee. So no, I don't want to charge anymore to the Pip Club fans. We're in a tough world. We're in a tough market right now and have been for a couple years. And you guys that have been around for years, and paid the money to get here, and some of you paid real money, I just feel like I want to give you everything that we can. And when it's beyond the point where, you know, it's eating in the pockets, then we got to charge a little something. But I just want to bring value to everybody that's been along and supportive all the years. And so that's what we do. Yeah, I don't think it's undervaluing. The value is down here. The value is down here. And you know, I talked to Christopher Terry over the weekend about the analyzer. I'm testing the analyzer, the web analyzer. You know, Jason Brown coming back about working on a potential licensing agreement with IML for the TAB29 product. Of course, I've told you before, he and I are already in talks about a venture for an auto harmonic scanner where we use harmonic wave convergence to scan out trades. You know, he's got some criteria and he wants to use this as a way of screening out trades. So there's lots of potential down the road. It may or may not come to fruition. It's okay. But if I can see the guys that started with me with Pip Club become financially free, I got all the payment I need. Oh, I won't be an auto trader. I'll be a fusion trader, but that's down the road. The nice thing with harmonic wave convergence is we could put it with anything, you know. And for those that are participating in IML with me in the Forks, you know, Scans, Forks, and Fibos group, you know we're using pitchforks and scans simultaneously to do pretty cool things. And you know, when you marry harmonic wave convergence with that, you are getting precise trades and precise bounces at just the right points in time. And that brings all sorts of cool stuff. Talk about selective trading. It's very powerful when you see, a lot of people think of this of the scan. A lot of people think the whole scan is based on this, on the D entry. And that's okay to do. I'm not saying that's there, but we're, you know, what I'm teaching and what we're doing is automatically using the scan to draw a fork. And so I'm going to come in here as soon as the scan paints, I'm going to draw this CD fork. My first place to take it is going to be one of these, and it shifted again because I moved it around, one of these swing lows to make it a traditional fork. So you can see if I bring it immediately back to the A, and this is away from our stuff here, but I'm going to show it anyway. We come immediately back to the B and make it a traditional fork right here. Boom. Look at your touch. If I bring it back to the X, you know, we get a couple other, well, it's too far. Bring it back to the X, we get a couple other trades. And then simple old fart trading skills, you know, my eye caught this pullback right away. I saw that shortage. And I thought at first a wave 2. But as soon as I saw that shortage, I draw this trend line. And I got my one hit, my second hit, 2 off the scan, and then this hit here. Got 3 hits. That should be a pretty solid trend line. What about upward forks? Buy bottoms. So I know I can take this line, which is a proven line, and move it up to my highest point. Right there, the A. This hit right here came down and landed at the 100% of C. So that move right there was 70 pips. That's 14% in one trade on a 15-minute chart. All in the setup, all in the setup. And the whole setup starts when this scan paints. Now, if price started moving down, if this scan failed at the D and it didn't start to move up, it started moving down, then we have some combinations. We can do an XA fork and point it down. We can do a BC fork and point it down. Just depends on how wide this channel gets. The wider it gets, the more I'm going to use XA. The narrower it gets, the more I'm going to use BC. See, the difference in a swing on a scan than any other is as the further you move into the scan, the more powerful each one of those swings become. So the time you get to the D, there's 3 to 4 fibos in consecutive order that make up that swing. And that's why D is not just a swing low, it is a super swing. The C just a tad less because there's 2 or 3 to make up that point. So this CD fork is the strongest fork you'll ever see as a pitchfork on any chart. And almost always, if you take it back and make it a traditional, which most third graders can do, this fork is going to give you more hits than what you'll understand possible. So like, an alert that says come to the chart, the scan is a come to the chart. How is everybody in the world teaching how to use this? Oh, wait for the D, make your trade at D. And we don't have to do that. If we catch that, that's great. But there's going to be 2 to 3 trades from this scan in one or both directions. It's a super way to trade. And now you marry that whole thing up with harmonic wave convergence, and the market doesn't stand a chance. All right, I don't see any other questions. I'll ask about that, Michael. I think I talked to Adam about that one time, and I don't know if there was a way. He was asking if we can have a template file that if people want to opt to use that template, they could. Adam, be thinking about that. No, a chart template. So we can give somebody, but that carries with, if I put a chart out there and somebody copies that chart as a layout to their system, they can then do that, right? We don't even need to transfer anything. Yeah, that's what I thought. Yeah. Yeah, so when I post a chart, all you have to do is click on that link, and then right up here, just save it, give it a name and save it. Because it'll say copy on a chart you post. So if I take the camera picture down here, let me do that. Copy that. Copy to the clipboard. So now let's say you get that link and you post it on your chart, or you post it on your system. How does that work, Adam? Where's the copy? Oh, that's right. That's right. So the chart URL. That's just, is that because it's me that it won't show the copy button? Yeah. You would see, and there'd be a copy button up here. And when you say copy, it's going to give you a file name, and that file name or that name you give it becomes a layout in your chart setup. Will it do it there? Okay, hold on. Yeah, let me, oh, it's shift control. Oh, gotta get the right characters. There we go. I still don't see the copy. It knows I'm random. It knows it's not doing it as me. Oh, Oh, there it is. So you got to have the side windows closed. And then you're able to do it. So then you would copy this, give it a name, anything you want to type in here. I said INS overview copy because that layout was called INS overview. So then you can copy that and whatnot. But I can't do that with this one because there's some stuff in here not the way it'll be distributed. So, there'll be a separate. Once I get everything on the way it should be on, I'll be glad to do that. So, in terms of timing, it's a little bit more complicated. Obviously, you see we have everything. Everything's working just fine. So sometime tomorrow or Friday, and it might even be late Friday, I don't know, but sometime tomorrow or Friday, I'll send out some sort of notice. I'm just trying to figure out what we're going to keep protected, what we're going to allow open. And for the stuff that's protected, I have to go in, and for every item that we're going to provide you, I have to go back in one by one and add you an authorization. I can't go into the existing authorizations and do a global authorize these people for this indicator. So I have to pull up the indicator in the admin side, and then one by one, do it for everybody. So I'm not, I got to get a little tequila in me before I do that, because it's very laborious to add authorizations, which means things are going to change as we move forward. I can't handle hundreds and hundreds and hundreds of subscriptions in that manner. Yeah, there you go. Get a real JTA. So anyway, I hope you got something out of tonight. Sorry we went long on this, but I'm really excited about what we got. I think you're going to like it as much as when you first came to the charts with TradingView and everybody was overwhelmed by how powerful it was. Once you get all this on your charts, you have a trading beast. You have a trading beast, and it's just, are you going to use it or not? That's the whole thing. Are you going to use it or not? I love that, Dr. Pipper. Josh, you're funny. So you're going to have a beast trading tool, and stay plugged in, get involved in the groups, get active as all get out, and this new set of stuff is going to be very powerful. All right, I'll see you guys in Facebook land. Look for a note in the TAB29 group. I'll put it in Pip Club as well for the release and how you can add them to your charts in the next 48 hours or so. Adam, thank you so much once again for all your help. Really, I can't thank Adam enough. He's not only a real brain, but he's got a trader's perspective. He's come to know me a little, so he knows how to decipher what I'm talking about and translate it. He's like the guy at the UN that takes English and puts it in a foreign language. So Adam knows how to take my concepts and translate it to TradingView and then make it work. And he's just been a real pleasure to work with, because I can be demanding at times, and a lot of times he understands that, and other times he might not, but he never questions it. And he always gives me more than I'm asking for sooner than I asked for it. And in that kind of relationship, you can't ask for anything more than that. So I appreciate Adam a whole bunch. He's really made this move to TradingView something special for me and all of us. And with that, I'm going to say, hey, it's Wednesday, and that's the last time I'm going to talk to you live this week. So remember, life can be short. So those people you care and love, let them know you care and love them. I'll see you guys in Facebook land.